Stop! Before you make another investment mistake that could cost you millions.
Okay, Morgan, challenge me. I'm representing every viewer watching this right now who's tired of losing money. What's your secret?
All right, Jerome, here's the challenge. I'm going to give you a portfolio strategy using only 4 investments that will outperform 90% of Wall Street professionals over the next 20 years.
Welcome to Walk to Money, Walking to Success. 4 investments? Morgan, that sounds impossible. Professional fund managers use hundreds of stocks.
And that's exactly why they fail, Jerome. Here's portfolio component number 1. The growth engine. 40% of every dollar goes here, and you have 2 powerful options.
Wait, what are those?
VTI and VOO. 2 of the most powerful wealth-building machines ever created, Jerome. VTI gives you the entire U.S. stock market. 4,000 companies from giants like Tesla to small innovators. VOO focuses on the S&P 500, the 500 most profitable companies on the planet.
Want the complete step-by-step guide for this 4 ETF challenge? Grab the detailed ebook through the Hotmart link in the description below. Everything you need to start building wealth today.
So I can choose between owning the entire market or just the top 500?
Exactly. VOO has tripled in value over the last 10 years, Jerome. But here's the kicker. You're not picking individual stocks like a lottery ticket. You're buying the entire casino.
But Morgan, what about market crashes? What about recessions?
Look at this chart, Jerome. Through the September 11th, through the 2008 financial crisis, and through the COVID pandemic, both VTI and VOO kept climbing. You know why?
Tell me.
Because betting against human innovation and progress is the worst bet you can make. Individual companies fail, but the collective power of America's greatest businesses? That's unstoppable.
So instead of trying to pick the next Apple,
you own Apple and Microsoft and Amazon and their future competitors. When they win, you win. When one crashes, you're protected by hundreds or thousands of others.
Okay, Morgan, you've got my attention. But that's only 40% of the portfolio. What about the other 60%?
That's where things get really interesting, Jerome. The second component, it's what I call the crisis converter.
Crisis converter? What does that mean?
It means when everyone else is panicking and losing money during market crashes, this component actually makes you richer. Most people lose their shirts in downturns, but this...
Morgan, you're killing me with suspense. What is it?
30% bonds, Jerome. But not just any bonds. Jerome, meet your financial bodyguard. When stocks crash, this saves you. When markets panic, this keeps you calm. It's called bonds.
Bonds? Morgan, everyone says bonds are dead money. Why would I want 30% in something that barely grows?
Because, Jerome, the goal isn't just to make money, it's to keep money. Let me show you something that will blow your mind. Option 1, TLT, the iShares 20-plus year Treasury Bond ETF. This tracks long-term U.S. government bonds, the safest investments on planet Earth, backed by the full faith and credit of the most powerful country in history. When there is anxiety, when there is war, when there is instability, the TLT is so good. Furthermore, these products have historically proven to be more profitable than stocks. Option 2, TIPS, Treasury Inflation Protected Securities. These are specifically designed to fight inflation and protect your purchasing power when governments go crazy with money printing.
So I can choose between crisis protection or inflation protection?
Exactly. Both serve the same purpose. They're your portfolio's insurance policy. Now let me show you why this is so powerful. 2008, Jerome. Stocks crashed 50%. People lost their homes, their retirements, their dreams. But watch what happened to TLT.
Wait, it went up during the crash?
20% gains while everyone else was crying, Jerome. When the world falls apart, investors run to U.S. government bonds like a life raft. Wars, pandemics, market crashes. TLT becomes a magnet for scared money.
So while my stock ETFs might be down,
Your bonds are making you money. It's like having a financial insurance policy that actually pays you during disasters. And if you choose TIPS instead, Jerome, you're getting an inflation assassination. When governments print money like crazy and inflate away your purchasing power, TIPS actually increases its value to match inflation. Most people get destroyed by inflation, Jerome. Their savings become worthless. But TIPS holders? They actually profit from the chaos.
this is genius, Morgan. But we're only at 70% of the portfolio. What's the third component?
Option 1. VWO, Vanguard Emerging Markets, Stock Index Fund, ETF. This gives you exposure to thousands of companies across developing economies. Option 2. EEM, iShares, MSCI Emerging Markets, ETF. Both track the explosive growth happening in other countries.
So I can choose between two different ways to access emerging markets?
Exactly. Both give you the same opportunity. Exposure to economies growing 2 to 3 times faster than developed markets. Let me show you why this matters. Jerome, while the US grows at 2 to 3% annually, emerging markets have been exploding at 7 to 10%. We're witnessing the largest economic transformation in human history. Billions of people entering the middle class for the first time ever.
That sounds incredible, but also risky.
Absolutely risky. That's why it's only 20%, Jerome. But think about this. China's economy has grown 40 times larger since 1980. India is following the same path. You're not just investing in stocks, you're investing in the rise of entire civilizations.
So this is my aggressive growth component?
Your ticket to the greatest wealth creation story of our lifetime. But now, Jerome, we come to the final component, and this one might shock you. Component 4. The Ultimate Shield. 10% in gold ETFs. And yes, I have 2 options for you here too. GLD, SPDR Gold Trust, and IAU, iShares Gold Trust. Both track the price of physical gold without you having to store bars in your basement.
Gold. Morgan, isn't that old-fashioned?
Jerome, for 5,000 years, when governments collapse, currencies fail, and markets crash, what do people run to? Gold. It's the ultimate insurance policy against human stupidity. There it is, Jerome. The complete system. 40% global growth engine, 30% crisis converter, 20% opportunity hunter, 10% ultimate shield.
So I just buy these 4 ETFs and that's it?
That's it. No stock picking, no market timing, no stress. You buy them consistently, rebalance annually, and let compound interest work its magic for 20 to 30 years. Here's your challenge, Jerome. Start with whatever you can afford, even $100 a month. Split it across these 4 components. Do it consistently. And in 20 years, thank me when you're financially free.
Viewers, there it is. Morgan Housel's complete 4 ETF strategy. Will you take the challenge? If you like this video, subscribe, hit that bell button for notifications, and share with someone you think this video will help. This is Walk to Money, walking to success.